So hello everyone, Assalamu alaikum, and a very good evening to all of you who has joined us today. My name is Samir Sohani. I am currently working as the research associate in Bangladesh Rating Agency Limited, and on behalf of all of my colleagues, today I'm going to host the program. So as those who do not know, every month BDRAL arranges a webinar addressing contemporary economic issues. So this month, we are going to talk about a very time-relevant topic, which is foreign exchange market and its implication in Bangladesh economy. So today's program is going to be a very special and interesting one because as you all know that we have our panelists representing three different sectors of our economy, from education sector to banking sector to software and information service sector. So I would like to introduce all of you with our panelists today. We have here Dr. Gaur Gobindo Goswami. Sir is the professor of Department of Economics in North-South University. Sir has done his PhD in economics from University of Wisconsin, Milwaukee, USA University. We also have here Mr. Mazharul Hassan, CAMS, CDCS, CITF. He is the Vice President and Head of International Division of South Bangla Agricultural and Commerce Bank Limited. And we also have here Mr. Enamul Hafiz Lotifi. He is the Joint Secretary of and Research Fellow of Bangladesh Association of Software and Information Service. I would like to welcome all of you to today's webinar. Welcome, sir. And yes, today's program is also very interesting because not only our panelists, we also have here our three board members. I would like to introduce them to you as well. So we have Mr. Rajesh Mirchandani. He's our chairman. He's the chairman of BDRAL and also the CEO of Dun & Bradstreet South Asia Middle East Limited. And we also, do we have Misbah sir here? Can anyone confirm me?
No, he has not joined yet.
Okay. So we have here Mr. Himadri Bora, sir. Do we have him?
No, they are supposed to join by the time.
One of our director, Mr. Himadri Bora, was supposed to join us, but unfortunately he hasn't. So yes, of course, we have our keynote speaker, Mr. Muhammad Kamrul Bari, MIPA AFA. He is currently working as the first assistant vice president of Research Advisory Research and Training Unit of Bangladesh Rating Agency Limited. And yes, of course, last but not the least, our CEO, sir, Said Abdullah Mamun, sir. He is going to be the moderator of this program. So before handing over to Mamun, sir, can you please tell me if Chairman, sir, is here?
Okay, just let me check. No, he's not yet joined. If joined, I'll let you know.
Okay, sir. So before handing over to Mamun, sir, I would like to tell all of you that we're going to have a question answer session at the end of this program. Please ask any question to our panelists, to our keynote speaker. Your answers will be given. And so I would like to request Mamun sir to take the floor, sir.
Thank you, Samira, for your nice introduction. Let me share the screen. Okay, can you see the screen, please? Can anyone confirm me?
Yes, we can see.
Yeah. So on behalf of the Bangladesh Rating Agency Limited, I would like to welcome all of you of today's session. This is the regular event of BDRAL to create a platform of discussing the contemporary economic and business issues. As a knowledge-based organization, we always try to update our employees and staff so that they can play their role in a more appropriate way. In addition, we feel the obligation to interact with the industry and our colleagues in the community so that we can be enriched with a knowledge sharing environment. And as part of that initiative, today we are going to organize that BDRAL monthly webinar on the foreign exchange market and its implication in Bangladesh economy. As we all know that the current volatile economic environment across the globe, foreign exchange issue is one of the most critical issues, particularly when most of the currency around the world are depreciating against the dollar, which is most widely used currency in the world. And its major implication is that cost of doing business for the economies, particularly the emerging economies, is increasing due to their dependency on the international market for their importing raw material, machineries, and other consumable goods and services. In that context, as an emerging economy, Bangladesh is experiencing some adverse situation. Though the policymaker as well as the corporate management of Bangladesh are taking different measures to overcome these challenges. In such a situation, the uncertainty and the dynamic of the foreign exchange market is changing very quickly, particularly in the post-COVID period, which is accompanied the recent Ukraine-Russia war and other economic uncertainty and complexities in the global market. So how the Bangladesh corporate communities and policymakers are responding to this global crisis, particularly in terms of foreign exchange issues, to build their resilience and overcoming the adverse impact of this global economic crisis is our main focus. In this respect, we are very delighted to have very distinguished speakers like Professor Gaur sir, who is an eminent economist as well as an academic. We are really grateful to have you, sir, in this session. We are also very delighted to get the seasoned banker like Mazharul Hassan, who is an expert in that area. He is actively engaged in international trade and the foreign exchange issues in day-to-day basis. And we have also the representative from business community, Mr. Enamul Hafiz Latifi. We are also glad to have you to listen your experiences and your observation about the industry people and industry policy makers view as well as their expectation in terms of the foreign exchange market stability to tackle these challenges. So my colleagues and all participants, warm welcome to all of you of today's session. And I'd like to take the opportunity to introduce our company, our organization to all of you. So BDRAL is a subsidiary of a global company, global American company. This is the Dun & Bradstreet Southeast Asia Middle East Limited. And it is incorporated in Bangladesh in 2008 and got licensed for the credit rating in 2012. And almost 37,000 SME rating have been done by the BDRAL so far up to last quarter, and more than 300 corporate ratings have been done as well. As a Dun & Bradstreet company, it has also the institutional shareholders as well, and we are very delighted to have all the prominent and renowned financial institutions and non-bank financial institutions are the shareholders of BDRAL, which enrich us with our like institutional structure. And our parent company, Dun & Bradstreet, is a global American company having the 200 years, almost 200 years company, is the largest commercial database, having more than 400 million business records we have. And the global client base is approximately 150,000. Almost 90% of the Fortune 500 companies rely on DNB data. And one interesting information is that for ex-president of the USA were the employee of the Dun & Bradstreet. So Dun & Bradstreet carries a very glorious legacy of its operation. And it has 200 plus offices across the world. And as I mentioned, more than 400 million business records. And Dun & Bradstreet South Asia is looking after the South Asia, Middle East, and African market, which have 67 markets operation of the DBSM. And these are the ranges of the services DBSM provides. It's a risk management solution, credit rating, credit bureau services, sales and marketing solution, economic analysis group, research advisory, and financial technology solution. And the key engagement of the BDRAL in Bangladesh market, we primarily provide the credit rating services for the local enterprises as per the requirement of Basel III, as well as other domestic requirement. And we also provide some research and advisory services. So we conduct the economic analysis in the regular basis. We do industry analysis for our clients, business advisory services, and ESG analysis we also do for the companies and our clients. And we have also the publication for the first this kind of SME of Bangladesh series. And we do also some impact analysis reports based on the considering the contemporary issues. And we have also wide range of the training and very innovative training we try to provide, mostly from the industrial practice oriented. Like one of our flagship program is the financial statement analysis using the case basis approaches. As we have the global database as well as the local in-depth analysis through our financial analysis for the credit rating. So we have a good range of cases which we use in our training that makes it very unique. As a regulated service providing organization and as a global credible institutions, BDRAL is very careful about giving its services, particularly in terms of its independent. We are very keen to provide independent opinion, and we do rating analysis by internationally trained analysts. Our analysts are trained by the global top-notch rating agency like Moody's. We give insights for the financial strategy as well. Like when we do analysis, we not just only prepare and provide the report, rather we consider to what extent our clients get the inputs from the credit rating so that they can use these inputs in their decision making. And also business strategy analysis we do so that our clients get insights that to what extent they can like reassess their strategy which will be helpful for them for strengthening their financial repayment capability. And the uniqueness of the BDRAL is that it's a subsidiary of the Dun & Bradstreet. As I mentioned, that as a subsidiary of the global company, we have a lot of competitive advantages, both in terms of maintaining the quality as well as in providing the high quality services. We always consider that our human resources are the key. That's why we engage them in the continuous training. And we also ensure the appropriateness of the training and its international quality. And we have a robust credit rating methodology, which we go beyond the regulatory requirement. Is we do not limit ourselves on the regulatory requirement. We feel that our clients are our business partner. So we try to help them. We try to give them the insights so that they can use our report not only for the credit rating fulfillment requirement, but also for their business requirement. And to update ourselves, our research team engage in continuous research and like investigation and the survey activities. Though we have a dedicated research team, but we try to engage across the organization, our analysts and others. So we create an ecosystem within the BDRAL we're building a cross-functional team to build a very in-depth research out. And we have also the countrywide business network, which covers all of the districts and divisions of the Bangladesh with our business network. And we believe that we try to find the truth from the data. We try to accumulate data, but we try, through our analysis, we try to find what is the actual fact. So, and finding the truth, we try to give the best like insights so that the clients and corporate get the better input for making their better decision, which ultimately lead their best and the better business performance. And as a whole, our commitment is to ensure the credible credit rating for the sustainable growth of our client as well as the economy as a whole. So having this introduction, I would like to again welcome all of you of today's webinar on the foreign exchange market and its implication on Bangladesh economy. And let's enjoy. And I believe that all of the participants will be enlightened from the keynote paper as well as from the analysis of all distinguished and knowledgeable experts who are here as our panelists. Thank you very much. So now I would like to, at the first is I would like to invite our keynote speaker of today's session, Mr. Kamrul Bari, First Assistant Vice President of BDRAL Research, Advisory and the Training Division. So may I request Mr. Kamrul Bari, present your paper. Your time is 30 minutes.
Thank you. And Assalamu alaikum, Dr. Mamun Bhai, and distinguished guests and honorable management team who are basically present here from Dun & Bradstreet, and also all the respected guests and audience who are basically connected here today. So Assalamu alaikum and very good afternoon. So today we are going to basically look at, as Dr. Mamun Bhai has very clearly mentioned, different aspects related to volatility of foreign exchange market, and also other issues as they have unfolded. So without any further ado, I'm going to try and share my slide at first. I hope that I'm audible, am I?
Yes, you are.
Yeah.
Okay, thank you. Thanks. Well, so let's go into the presentation. So can you see the slides?
Yes, sir.
Yes.
Okay. All right. First of all, so let us have a look at the title for better understanding of what we are going to basically look at in today's discussion. First of all, which is foreign exchange market and its implications in Bangladesh economy. So how the market is going to play a role in developing and also the foreign exchange markets and the economy as a whole. We are going to basically try and understand that through today's discussion, basically through this keynote and also from our distinguished panelists. So this is a content which I'm going to talk about. The snapshot of the effects of exchange rate is going to be the first area, then determinants of exchange rate, then recent developments in the foreign exchange market and its implications. Means how did the exchange rate volatility affect the economy? We are going to empirically look into it. So dissemination of some research findings, major research findings of impacts of the foreign exchange market. Oh, by the way, is the slide visible, this content slide? Probably the network issue is there, so there may be some lagged responses. Well, should I continue? Should I continue?
Yes, it is visible. Yes. Please continue.
Yeah, it is visible.
Thank you. Thank you. Thank you. And finally, the way forward or the policy recommendation. So we are going to basically look into these issues. First of all, a snapshot of what has been happening around the world. So if you can see the slide, the world currency reserves, it shrunk by $1 trillion because the central banks around the world, they were basically selling off US dollars from their reserves in an attempt to save their currency, or let's say make the currency stable. Then India's foreign exchange reserve is dwindled, but currency difference is still strong. So their economy has already taken a hit, but still they're surviving and they're actually fighting back. Then comes even the foreign exchange market is getting kind of crazy, which is basically the Wall Street Journal's headline. So it indicates the volatility, which we can see on a regular basis on an everyday news. Then comes the dollar is stronger, who wins and who loses. So definitely it has already been identified by many researchers and also through the regular dose of this information which is available to us, which are made available to us. We already know that we are. Now, if you look at the lower part of this particular PowerPoint slide, then we can see a comparison of the foreign exchange reserves. So of India, Bangladesh, Pakistan, Nepal, Sri Lanka, and Maldives. And as we can see, Bangladesh is in the second position. So we are doing pretty good despite the hits that we take. Then some of the developments in the foreign exchange arena, as far as Bangladesh is concerned, as you can see, the reserve has fallen below 36 billion. It is probably 35.9 as far as I can recall. So the data is going to be shown today in a later slide. Then remittances exports, it fell, putting more pressure on the reserve. Then foreign reserves under further strain as Bangladesh Bank has taken initiative to stabilize it. This is why forex reserves are going down. It indicates a few reasons why foreign exchange reserve is going down in our country, specifically, as we all know that it is normally led by US dollar. Now, given all these issues at the very beginning, we understand that at first we need to know the dynamics, that how this exchange rate is determined. Then we can look into the, let's say, realities associated with, let's say, movement of the exchange rate, because movement happens because of the movement of the causes. So we have to basically go beyond the movement or volatilities of the exchange rate, and we will try and find out what are the causes, root causes of those movements. First of all, we will look at the traditional factors. As we all know, that national price level, which is explained through the PPP hypothesis or purchasing power hypothesis, which was introduced by Castle back in 1918. And then comes the interest rate, so which is basically explained more clearly by Keynes, and it indicates that the interest rate actually explains the relationship or explains, let's say, the volatility or the movements of the exchange rate in a better fashion. So that is basically the claim. And this relationship is established as the forward market is introduced and as it was, let's say, evolving. So this is like the relationship between interest rate and exchange rate was also evolving. Then comes the balance of payment. So as we all already have an idea about the balance of payment, it is linked with international payments, all kinds of international payments that we receive and we pay actually to the world. It also gradually establishes a relationship with exchange rate itself. So we already know this background. These are the major factors: the national price level, in other words, the inflation, and then the interest rates, the interest rate parity or the differences of interest rates, and then the balance of payment items. Now, if we look at the comparisons of these major theories, then what we can see is that as the domestic prices increase, the exchange rate increase, causing a proportionate depreciation in the currency value. Then comes the interest rate issue. So it indicates that the interest rate differentials, it is basically the fundamental of explaining the relationship between the exchange rate and the interest rate itself. In other words, interest rate differentials can explain the movement in exchange rates. Then comes BOP. So when we look at it, it actually looks from, in many cases, it looks actually backwards, and also it looks forward in certain cases. We are going to see when we are going to, let's say, dig deeper to identify empirically what is happening around the world. So with an increase in the nominal exchange rate or devaluation, the domestic prices or price level increases, so it makes our exports cheaper. So these are basically the relationships which are theoretically explained everywhere. Now, given these backgrounds, now we should look at the ground realities. What has happened around the world as far as the relationship between the, let's say, determinants and the exchange rate itself is concerned. Now, when we look at different researches, different previous research, we have already found that PPP hypothesis is not valid in the short run. In the short run, the price level of two countries or the ratio of price level of two countries, it cannot explain the exchange rate. Then the next one, it says in the short run, the real exchange rate follows a random walk. In case of a random walk, we already understand that the movement of exchange rate actually is random. So if it is random, in that case, it's understandable that it is not moving in tandem with any other variables. So then comes, let's say, the next evidence related to PPP. In the long run, the exchange rate reverts to their means. It has a tendency to go back to its mean. Then the reason why variability of exchange rate is higher in the variable exchange rate system compared to the fixed exchange rate system, that is also actually indicated here. So you see, we already know that in case of fixed interest rate system, the fixed exchange rate system, the exchange rate itself is fixed. So definitely it's not moving. So since it's not moving, it is obvious that the volatility is going to be more. And in this case, as we all know, that to keep it fixed, the central banks, they have to sell the major currency against which basically their value, their currency value is depreciating, or if the opposite happens, then they buy. So in order to ensure that the appreciation happens. The depreciation happens. If appreciation, if the currency appreciates, in that case, they reduce, let's say, the demand for their currency, and the demand for foreign currency actually dictates the gain. Now, the PPP, it has been identified that it is non-existent. It does not exist in Japan, Korea, Pakistan, Philippines, and Thailand when we compare these economies with the US. On the other hand, Hong Kong, Singapore, and Sri Lanka, they have shown mixed results. And Indonesia and Malaysia, they have provided strong supports for the PPP hypothesis. It means for these two countries, inflation is the major determinant of the exchange rate, or the ratio of price level is one of the major determinants of the exchange rates. Then absolute PPP, it has also been found absolute PPP doesn't hold, rather relative PPP holds. Now, I'm not going to go into details, but I'm going to give you an idea. Absolute PPP says that the exchange rate is equal to the ratio of price level of two currencies. Means the exchange rate between Taka and dollar is equal to the ratio of price level of USA and Bangladesh. And relative PPP, it indicates that the difference between inflation rates, it explains the change in the exchange rate or the movement of the exchange rate. So it has been found that the relative PPP, it holds true. The absolute PPP, it doesn't hold true. When it comes to, let's say, interest rate, we have found through, let's say, our literature review that CIP or covered interest parity hypothesis, it is already there, it is already present. Covered interest parity hypothesis tells us that the difference between the spot rate and the forward rate can be explained by the difference of interest rates of two countries. So then comes the major part, that even though we claim through the interest rate parity hypothesis that it actually explains the exchange rate better, and this is the most fundamental reason, but ultimately there are several research papers which are basically conducted by taking realities around the world, which found that interest rate is not an unbiased predictor, and it can only explain very insignificant portion of the movement of exchange rate. Means it is not an effective, let's say, I should rather say, on BOP. The more open a particular country is to trade, which can be estimated by taking. Can you hear me properly? Hello, am I audible?
Yeah, we can see, we can listen you. Yeah.
Okay, so I'm continuing then. So the trade openness, which can be determined by taking the ratio of total trade and GDP, so that actually has a positive.
I think yes,
Sorry, I got disconnected. I do not
network problem. No, it's okay. Now you can audio.
Sorry for this inconvenience, everyone. Yes, Kaya is online now.
Extremely sorry for the interruption. So this was basically a network issue. Well, anyway, so then comes basically the other evidences related to, let's say, PPP, IR, and BOP. More interesting findings is basically the last one, as you can see. The exchange rate, the percentage change or the volatility, how can we basically determine it? This can be determined in many different ways. It can be determined by taking the percentage change in exchange rate, then by taking the percentage change in the real exchange rate, by taking the percentage change in the nominal effective exchange rate, and also the standard deviation. So there are so many different ways to determine it. And another interesting issue is that the BOP variable, which we have basically included here, this BOP variables, impact of exchange rate on these variables cannot be concluded with certainty. And still there are thousands and thousands of researchers who are trying to find out the truth. at how the exchange rate affects the BOP variables. Is the unexpected information and political economy. They also tend to dictate the exchange rate movements. Then comes the most common one, which is basically the equilibrium. So the exchange rate is determined through the equilibrium, as we all know. The demand for a particular
we have again lost the connection. Please have patience. Are you able to join soon?
Sorry for the interruption. So the network issue is basically making our life a bit difficult today. Well, so can you hear?
Hello?
Can you hear? Hello, can you hear?
Yes, we can hear you, but not clearly.
Okay. So just give me
I
a
think you
second.
can continue. Yeah.
Okay, thank you.
Okay, you can show, like, turn off your video, then I think it will disturb you lesser.
Okay, thank you. Yes, I'm trying to. Well, so I guess now it is better. Yeah. Well, so equilibrium in the exchange rate market. So as we all know that the equilibrium actually determines the exchange rate of any particular currency. And let's say if we look at the overall or total demand of any fund which are denominated in US dollar and the supply of, let's say, funds denominated in US dollars, or the assets which are denominated in, let's say, US dollar, when these two meet at a particular value of a foreign currency and they are equal, so at that position we basically get the equilibrium, and that tells us about the exchange rate of a particular currency against US dollar. Now, over the short period of time, the decisions to hold domestic foreign assets play a much greater role. So it indicates that in a shorter period, actually the export and import, it does not influence our exchange rate, but rather which dollar asset or also which currency asset, for example, US dollar asset or euro denominated assets or taka denominated asset, which let's say currency assets or currency denominated assets are we willing to hold, that actually determines the exchange rate. This demand and supply related to a particular currency actually interacts with each other and determines the exchange rate in the short run. But in the long run, as I have already mentioned, that there are mixed evidences related to the exports and imports, which are basically, as we understand, the BOP variables. Now, the players in forex market in Bangladesh, so banks and financial institutions, importers, exporters, Bangladesh Foreign Exchange Dealer Association, retail customers, central bank. So they are the main players. Now, the recent development in the foreign exchange market, we know that actually the demand and supply, when they two interact, then basically we get equilibrium, and that gives us an exchange rate. We know interest rate has an impact. We know inflation has an impact. We know BOP has an impact. Now, given all this, we're now going to look at the recent developments or recent phenomena around, let's say, the foreign exchange market of this country. If you look at these two graphs, the left graph actually indicates the movement of exchange rate of Bangladeshi taka with US dollar. So for a period of 10 years, this is annual data. And this is basically monthly data taken for a bit more than 1 year. So as you can see, there are huge volatilities, and during 2021 and during 2022, so the volatilities are actually higher. But interestingly, almost all the volatilities, if you look at the annual data and if you look at the monthly data, is happening on the positive side of the graph. Means depreciation is actually leading the show. If you look at these dates here, these stamps, then you can see that during July and November of 2021, there were some sort of volatilities. Between June 6 and 15, there are a bit of volatilities. And in September, we have the highest volatility within one particular day, on which we had 7.89% of depreciation. Now, based on this, we have tried to identify the reasons. So since June is basically the starting or beginning of this, let's say, fluctuation for this particular year, we started the series of events from, let's say, the beginning of June. So on May 29, the Central Bank of Bangladesh, for the very first time, they reduced the exchange rate from 86 to 89. Means they devalued the currency or depreciated the currency. This was probably the first major depreciation after a long time. Then instability, actually it continued, so they could not stop the instability. So they decided that they're going to leave the exchange rate determination, the entire demand and supply function to determine what should be the price, let's say, of a particular currency. So in this particular case, the US dollar. Unfortunately, that did not work out either. But actually, they thought that this is going to have some positive boost on the remittances, and later on we will see that it actually did initially. Then the current market, as you can see, it actually remained higher. The value of the exchange rate of US dollar in the current market was higher than the. On July 16, three major decisions came. The first decision was a decision related to ERQ, or exporters retention quota. So some exporters, they keep some amount of money in the exporters retention quota. Bangladesh Bank instructed to liquidate 50% of all the holdings to basically reduce the demand for US dollar, because at the time the demand was significantly higher. The retention limit of the export proceeds were reduced to half. So that also eased off the demand. And then comes actually the limitations on the transfer of funds between offshore and onshore banking units. So that was made actually 25% of regulatory capital. So the offshore banks, they were allowed to transfer, let's say, dollars back to their local units, or let's say their local branches, but it could not exceed 25%. Then the open position has been reduced from 20% to 15%. On August 4th, as I've already mentioned, that after the Bangladesh Bank left the determination of exchange rate on the market, so the influence has been seen on the remittances, the remittance inflow. So there was significantly higher remittance inflow in July. And interestingly, this was also due to Eid of this particular period. So actually at this time, there was, more importantly, there was basically a higher exchange rate. So, or let's say higher value of a dollar in terms of data. So these two factors may have played a vital role in basically influencing the remittance during these two periods. In July and in August, we had actually high inflows of remittance. In September, it went down. Bangladesh's total export in the first month of the current fiscal was 3.98 billion. It is up by 15% on a year-on-year basis. So these two actually gave a boost to our foreign exchange reserve. And after that, Bangladesh Bank has seen that still there are volatilities in the market. Still, it is uncontrollable. So what they have decided that, okay, it is now time to basically discipline the market a bit. So they tried to cap the rate movements between 99 and 108. This has now reduced, been reduced to 107.5. And the selling price can be the highest highest purchasing rate, plus basically the rate or the average of the highest selling rate and the importing rate plus 1 taka. This 1 taka is the spread, the additional 1 taka, which is the maximum allowable spread for selling of currency at this point in time. Now some other policy interventions. On July 20th, Bangladesh Bank also extended the use-and speed. Due to the extension of use-and period from 180 days to 360 days, the exporters got a bit of relief because we all know that most of the raw materials are imported for our exporters. Now, for the import of raw material, they're getting more time to make it. On September 15, Bangladesh Bank specifically indicated that they do not recognize the virtual currencies, so that the virtual currency trading does not happen. And obviously, it is good in the sense that it saves for its reserves, or let's say for exchange reserve. So obviously, as we all know, that investment in, let's say, cryptos, for example, so that is also an investment opportunity. So whenever there is idle money, so it will always run after any investment opportunities which are available. Hello.
Yeah, we can listen you. Please continue.
Thank you. Thank you. Well, so that is a major issue. That is a major concern. So in some cases, in some of the platforms, if you want to buy, let's say, cryptos, in that case, you have to convert your local currency. So that can actually help us to save some for its reserve. But that also can create some sort of difficulties in bringing money for some services per service. Moreover, Bangladesh Bank and also the Ministry of Finance, as we have heard from them on several occasions, and also several other countries, they are introducing digital currency. So this is why it is very important that a detailed guideline is laid out to understand to what degree or to what extent, what types of digital currencies or what types of, let's say, different kinds of cryptos, if any, will be allowed in this particular country this time, because we need to embrace technology advance. But whether it will be in the cryptos, whether it will be in the digital currency, that is another point of concern. And for that, stakeholder consultation is important. The Bangladesh Bank also gave an opportunity to trade in Chinese yuan. This opportunity was there. So, but this option is already available. So it can help us to save some precious US reserves, US dollar reserves. Now, repayment has been made a bit relaxed for EDF loans or Exchange Development Fund loans. Now, there is obviously a positive side that export is going to be boosted because of this. But unfortunately, getting money from EDF loan or EDF debt can be a bit longer. So it can actually create a bit of, let's say, tightness as far as the liquidity of reserve is concerned. Now, the most important part as far as our research efforts are concerned. So we have understood that the events have been developed, the several events have been developed in the forex markets. Many of them had, let's say, impacts on our economy in many different dimensions, and many of them are supposed to have different kinds of impact. But the question is, do we see the type of impact which we hypothesize? So that is basically what we try to identify through our research initiatives. There are 4 research questions. The first research question is how to determine the exchange rate in Bangladesh. We learned that the exchange rate is determined in certain countries through interest rate. For certain countries, inflation explained it. In certain countries, export explained it. What worked in Bangladesh? Second research question. How do the exchange rate volatility, foreign exchange reserve, GDP, interest rate, and inflation interplay? So what was the interconnection? How do they interact? What impact of exchange rate volatility is likely to be seen on the debt repayment capacity of the country? And finally, what are the likely remedies of the major concerns surrounding the aforementioned issues? Means what can be the solutions to it? These are our main variables. So change is our interest variable, and these are all of our dependent variables. Sorry, independent variables. This is the dependent variable. Change indicates the volatility of exchange rate. Inflation, INF stands for inflation rate, IS stands for interest rate, export-import means export-import ratio, natural logarithm of GDP per capita, PPP, on a PPP basis. Change in reserve is change in foreign exchange reserve, change in risk. This is basically the variable that I have used. We have used in the equation. Then ln, private consumption, natural logarithm of private consumption, ln of public consumption is natural logarithm of public consumption. Then foreign direct investment to GDP ratio and constant totals. At first, we tried to identify time series stationarity. Means we tried to see if any one of these variables has a trend or whether they have some sort of seasonalities. We have found, or let's say whether they have seasonalities or whether they do not have a trend. And we have found that actually either there is trend present in the data sets or in the data sets for change, inflation, interest, everything, or there may be seasonalities also. Means the time series was non-stationary. Because of that, we have chosen VECM or vector error correction model to predict the relationship between the volatility of exchange rate and the other independent variables like inflation, interest rate, and export to import ratio. The result is pretty, as you can see, we got one conjugating equation, and it is the chi-square, the p-value of the chi-square is 5.5%, which is pretty close to 5% and within 10% significance. Only one variable, one independent variable, tend to explain the percentage change in exchange rate, and that is export to import ratio in our country. So if the export to import ratio increases, then our exchange rate increases, means our currency value.
You have 3 more minutes to wrap up. Yeah.
All right. So I will try to make it as quick as possible. Now, based on this, I have actually talked with my team members and our wonderful CEOs. So to basically get an idea about what we can do, and we have come up with an idea of, let's say, scenario analysis to give an idea that what can be the movements of, let's say the exchange rate from the lowest possible to the highest possible. So we have found out that the lowest possible rate could be 139, and the highest possible rate could be 191, with an average and also in this case to be 165. Now, it is understandable that because of the timely intervention of Bangladesh Bank, we are not in this situation yet. Now, we do not know whether the situation is going to turn around or whether the situation globally is going to become even worse. But even if this happens, we do not believe that it should go beyond 165. And in extreme cases, it can be at 191. Then effect of year volatility on economy. So we have found out that inflation, exchange, change in reserve, export import, private consumption, public consumption, FDI, all of them, they affect our economy. But we are more concerned about the percentage change in exchange rate. So we can see that as the percentage change in exchange rate increases, our long GDP per capita, it increases. It positively influences the GDP of the economy. So as we understand that when exchange rate increases or the value of money depreciates, in that case, export is boosted. If export is boosted, then definitely it is going to have a positive impact on GDP. Then we tried to find out the relationship between exchange rate volatility and reserve volatility. And we found that there is a positive relationship. So if exchange rate volatility is high, then definitely the volatility of reserve is also going to be high, and it is going to be significant. So for every 1% change in the percentage change or in the volatility, for every 1% change in volatility of exchange rate, the volatility of reserve changes by 5%. Now, we have also tried and forecast the forex reserve for our country on December 31st, 2022, and we found that it can reach 34 billion. So it can go a bit further down, and it can reach actually 34. Now, we will try and discuss actually the debt scenario, very quick estimation. We have made a very quick estimation, as you can see from here, that Bangladesh's debt situation, as the data, as the figure shows, is pretty good compared to, let's say, the regional peers. And the FX reserve situation, as we all know, is actually declining. Now, if we come to, let's say, a very quick evaluation of debt, then we can see that with a projected value of reserve, and if we consider the worst situation of $8 billion of export, which was the highest that we experienced in over past 1.5 years, as far as I can recall. And even if you consider, let's say, the 7.4, which is also pretty close to it, believe me. And if we exclude $4.5 billion for debt repayment, 2.5 billion of current debt repayment, and 2 billion of extra debt repayment, which will start from, let's say, 2 or 3 years after today. But we are considering as if today is that day. We are assuming that right now we have to pay $4.5 billion to repay our debts. And the 8 billion of EDF is unavailable. Even in that case, using our forecasted value of reserve, we will be able to meet at least around 3 months worth of imports. So it indicates that we are not in imminent danger. So at least we can say that till March, it seems that we are safe until and unless some extra extraordinary event happens. Now, what is the impact on private sector? We know that for private sector, most of the materials or inputs are imported. So the import cost will be higher if the fluctuation is higher. Specifically says in depreciation, as we understand, it is going to be basically experienced in the future as well, most likely. It will affect the profitability, liquidity. And the businesses, what they can do is they can try and hedge their risks. They can actually go for, let's say, auto transactions. And another one is they can diversify their businesses. Since they're exporters, we know that most of the RNG exporters definitely concentrate in the export market. They can try and let's say, tap into their local markets also. So this diversification may help to offer them with an additional stream of revenue. Now, policy recommendation. First of all, we need to continue the import restriction, but it must not be long run. If it continues for long run, then definitely it is going to reduce our international trade altogether. So it cannot happen.
Okay, last minute.
All right, so please kindly give 30 more seconds. So I'm wrapping up within 30 more seconds. The reverse interest rate upward. So this is also important because inflation is going up, and this is also going to have, as we already understood, and this is also going to have an impact on the exchange rate and to hold some of the money which we have already in our country, at least for investment in the treasuries. Skill development initiatives for the long run, it can be initiated or it can be taken. And one issue is we must actually negotiate to reschedule the debts and for debt forgiveness. Like our debt repayment will start from with China and India within the next 2 and 3 years. We can try and renegotiate the terms, and we can try and actually push it up, push it further back, let's say after 3 more years. Or we can also negotiate for altogether forgiveness. And then also the monetary and fiscal policy, this must be set by considering the global economy and how it is going to affect our economy. We must carefully evaluate new loan or debt opportunities, whether it is from IDB or IMF or ADB, IMF or World Bank. We have to carefully evaluate. We need to negotiate short-term preferential market access. For example, with USA, with developed economies, because flight to safety, we know that this has happened. And because of that, also our, let's say, FX reserve has got some sort of impact, and developed economies, they can help us during this dire situation, during these circumstances, by allowing us some sort of preferential access. We can negotiate with them. And then additional grace period must be sought for the possibility of global recession in the coming year. We may request, we may try and negotiate for, let's say, additional grace period for the batch which are going to actually graduate from this group of countries. So thank you. Thanks a lot for your patience. So if you have any questions, so definitely we can address it in the session.
Okay, thank you. Thank you very much. Thank you very much for your very articulated and insightful presentation. Now at this stage, I'd like to invite, because at the end of all speeches, then we'll go for the Q&A session. Now at this stage, may I request the Enamul Hafizi Latifi for share his opinion about the industrial as well as the entrepreneur perspectives, like how do they experience the volatility and instability of the forex market in the context of the global economic crisis and other uncertainties. Please.
Yes, thank you so much, Syed Bamun Bhai. It's a very wonderful opportunity to be here today and to hear Mr. Kambal Bari Bhai and to touch upon the very timely issue actually. So myself again to introduce to all, I'm Enamul Hafiz Latifi, working as research fellow in BASIS, which is the representative and leading trade body of Bangladesh representing the ICT sector. So if we look at the present crisis that we are navigating through, actually, we would be seeing that the crisis itself is not actually made by Bangladesh in a discrete way. So it is the global blow that we are going through right now at this moment, following the domino effects from Sri Lanka, Pakistan, and many other countries, which is moving towards Bangladesh. And I would particularly actually touch upon that, and then we'll go to the feeling of private sector and especially of the service sector. How can we actually just to manage the crisis at a point that we not fall into any kind of economic trap. So having said that, we know that this today's system is basically based on the Bretton Woods Declaration and Agreement that was signed back in 1944. And after that, with few events, followed by a few events actually, US dollar has become the dominant forex reserve currency in the world, which is now actually challenged by some other rivalry economies like the alliances between the Russia and China. So it has actually got a political flavor and political economic flavor, which is beyond the control of any country in a very isolated way. So from that perspective, to look at this situation to manage for the country like Bangladesh, we have to look at the managing this situation at the short runs at every single point of time. and which the policies can be actually reviewed by the Central Bank of Bangladesh, which is Bangladesh Bank actually. So revise the policies not biannually or annually, but to accommodate the and revise the policies to address this change situation quarterly, if possible. Because we know that the situation can actually change very rapidly at any moment of time, considering the exchange rate volatility. From the private sector, we know that there are few policy instruments that some other countries are taking at this moment to battle the economic crisis. If we look at Sri Lanka and if we look at Pakistan, who are actually going through this in a very miserable way, in a sense. So they are trying to reinforce some old tools in a very newer way. Like we have got national savings certificate. So Pakistan also has got some government offered bonds directly to the individuals, for especially to the non-resident Pakistanis residing in other countries. So what happens over here? They had tried to build a online portal and inviting the non-resident Pakistanis to invest through that portal and buy their national bonds directly using that portal only. So with the help of ICT solutions like that, they tried to manage more than $4 billion just a single month to get invested in the dollar amount in their account just in a single month last month. So some sorts of innovative thinking in the present policy persuasion and to democratizing the investment tools of Bangladesh and to flourishing it further in the and popularizing it into the NRBs, non-resident Bangladeshis in other countries would be actually better solution for that, because the remittance earning does not actually guarantee the NRBs to receive some investment return on that, because it is going to be ultimately spent on some consumer products by the end users who are in Bangladesh of those expats. So if we try to attract some investments from the NRBs in our such tools, with the help of ICTs in real time, we can actually get the result of that. So this is the first thing, the old tool, but to promote it in a newer way with the help of ICT. And the second thing is that we have seen, certainly if we go to the even superstores or the in any grocery shop, we would also find that in their shelves, there are many sorts of imported consumer products and food products as well, besides the local market products, locally manufactured products. So when we were talking about to offset the drawbacks or consequences of the declining forex reserve here in Bangladesh, to tackle the volatility at this moment, we have to enforce some import control restrictions, not in the entire chain of imported products, but at the firstly at the segment of luxury products foremost, and secondly at the consumer products which are actually locally produced and manufactured, the industrial goods. So we have to think on that note as well. If we look at the import scenario of Bangladesh, we will see that there are worth of $10 billion worth of consumer products were imported last year, which actually is produced in Bangladesh at this moment, so which could be easily replaced by the local products. So that can be another area. And third thing, what I think to be done very quickly at this moment, we know that our export is doing good, but possibly it is not doing the best, and it is not going what should be, we would be happy to say that it is going to be in a optimum way. So to devise it in to be running at the optimum way, it could be better if we could offer more incentives, cash incentives directly to the export earners, specifically not in the product manufacturing sector, but into the service exporting sector, because of we know the value addition criteria. So what does it mean actually? It means if we actually compare the import and export of apparel sector, we would see that the value addition or the net retention of the export earning in Bangladesh is around 35 to 40% still. So what happens in the service sector, in the ICT sector, which I represent today, we do perform 100%, near to 100% value addition in Bangladesh, which means $1 earned from the any other countries and repatriated to Bangladesh, it remains completely entirely to the economy. So considering that, if government declares a 20% cash incentive, revising it from the existing 10% cash incentive at this moment, it will boost up the export earning because of the competitive advantage gained due to that. And exporters will be more inspired to explore more export destinations for the ICT services to offer further. So from my side, I think that can be done because as we know, scaling up the service sector is very much easier compared to the product manufacturing sector because of many issues, actually, because of the factor of production to accommodate accordingly. So thank you so much. I would love to hear from others and add something else if needed later. Thank you.
Okay, thank you. Thank you very much for your very nice and articulated points you have highlighted, particularly focusing on the service sector and replacing the import items which can be easily available or sourcing from the local markets. So I believe that like this sort of insights will enrich all the participants and give the scope to rethink about the policy driving issues as well. So at this stage, we are very delighted to have Mr. Mazharul Hossain. He's the Vice President and the Head of International Division of SBAC Limited. So may I request Mr. Mazhar to share your views about the role of the banking sector and particularly the international division of the banking sector to play the positive role and the appropriate role to contribute in the stabilizing the forex market and helping the policymaker as well as the investors, particularly the export importers, to come up with their optimum strategy and predicting the future forex exchange rate and its role in their cost of doing business. Please, Mr. Mazhar.
Okay. Sure. Thank you very much, Mamun Bhai. It's a good opportunity for me to share my views. Now I'd like to share my slide. Okay.
Yeah, you may close it. Yeah. Now you can share from the bottom, share screen.
Yeah, share the screen.
Yeah. Yeah, now open the file. You can minimize it. Yeah.
Is it okay? Not.
Yeah, it's okay. Could you please give it to the presentation mode form?
Yes.
In the right side, just the slideshow mode. In the bottom of the right side, here is the point. Yeah, in the right side, down. Yeah, yeah.
Is
Yeah.
it okay now?
Please. Yeah, this is okay.
Okay, fine. Actually, first of all, I'd like to share why foreign exchange reserve is necessary. Can you share my slide, everybody?
Yeah, it
Yeah,
can
we
be
can
seen.
see.
Okay, fine. Actually, foreign exchange is required to for every country because of to meet the import cost, for deal with the country's financial disaster, prevent the depreciation of the local currency, strengthen the monetary policy, implement the budget, provide money for the larger project, and ensure the payment of foreign debt. Now I'd like to share the Bangladesh foreign exchange reserve scenario. If we can see last 1 year back, 1.5 year back, April 21st, our reserve was $44 billion, and gradually it was increased. And August 21st, it was $48 billion. Then over the period up to June 2022, it was increasing, but up from June it was decreasing. And last August it was $39 billion. And if we can see the import volume from 2014 to 15 fiscal year to 2021 to 22nd, our import volume was $40 billion. And last fiscal year, immediate past fiscal year, it was $89 billion. On the other hand, if we can see the export volume from 2015-16 fiscal year to 2021 to 2022, our export volume was $34 billion, and immediate past export volume was $52 billion. So monthly, if you can see the monthly trend of import, export, and remittance, October 21st, our import volume was $7 billion, November $7.8 billion, then December, January, February, it was $8 billion, March to June, it was $7 billion, and from July, August, September, it has been decreased. On the other hand, export volume was in 2020, 21st October, it was $4 billion, and over the period up to April, it was $4 billion per month, and in May it was slightly down, and June it was further increased, $4.9 billion. July, August, and September. Last month it was $3.9 billion. On the other hand, remittance was 1.6 to 1.8, and only April, July, and August it was more than $2 billion. And unfortunately, in September it was $1.5 billion. So we can see the essential food item, because we know that price volatility or foreign exchange volatility was one of the reasons. That is, the price of the essential commodity has been increased globally. So in soybean it is a totally import-based item. Our local market, we do not produce soybean oil, and we have to import this essential item. On the other hand, natural gas, we have to import this natural gas. Both two items, we have been seeing that the price has been increased over the month. On the other hand, if you can see the devaluation of the BDT in comparison to US dollar, in January 2022. That means this year, first month, it was near about 86. But in September, it was increasing, and last it was $106, $6 per USD. This is not our case, but in all over the country, you can see from the screen that all over the country, Japanese yen, South Korea, Bangladeshi taka, Taiwan, Philippines, Malaysia, China, India, all of the country globally, they have depreciated their local currency against US dollar. This is the case. So before going to in-depth discussion, we would like to discuss our sector-wise discussion. Basically, we know that our RMG sector is the major big chunk of our export earning. This is 83.4%. This data has been collected from Bangladesh Bank and fiscal year 2020 first. Out of this, there are two components in RMG, knit and woven. Knit contributes more than 50%, near about 50%, and woven garments 34%. We have some item from which we can earn foreign currency. Jute and jute manufacturer 3.6%, fish 1.40%, leather 1.8%, and so on and so forth. So what we can see that most of the export destination country USA 16.5%, Germany 14.20%, UK 9.5%, Spain 6.6% over the years. And if you can calculate, 50% export destination is European Union country. And major group, if you can consider the group, EU member country 46%, 46.3%, G20 country, USA, UK, EU, Japan, India, China, Brazil, Canada, Russia, 92%. And third country only 4%. On the other hand, if we can see the major import commodity, our import commodity comprises cotton, because it is one of the major items for back-to-back LCs for our garments item, because we do not produce cotton. We have to import cotton for our textile industry. 12.44% cotton, mineral fuel and oil 12%, boiler capital machinery 8%, iron and steel 5.4%, and so on. Our major import partner in China, most of the import item we do import from China 25%, India 16%. So if you can add China and India, they are the major big partner in terms of our import trade. So it is more than 40%. In addition to that, USA is only 4%. So import mode of payment, you know that there are two types of LC. One is site LC, another is deferred LC. So 61% we have to pay on site basis, because you know that we have the import volume is $84 billion or $89 billion. Out of that, 60% payment we'll have to make payment within 5 banking days, and 29% or 30% are deferred LCs, which are in the form of capital machineries or in the form of importing the raw materials and so on. And there are other items, grantee or short-term trade. So we can see what are the basic reasons for dollar crisis. You know that during the pandemic period, there was import volume has been decreased. But after the pandemic situation has been lifted, our industry has been, they have started to import their raw materials. New industry, they have the new enterprises, they have started to import capital machineries, and that's why our import volume had been increased. Number one. Number two, you know that the short-term borrowing, because we know that UPAS LC or deferred LC, some foreign banks, they are discounting and they are confirming the LC, and bank have to pay after 180 days. And Bangladesh Bank has give the opportunity to open the deferred LCs for 360 days, 270 days. And the LIBOR rate was, at that time, it was below 1%, but over the period of time, it has been increased. Mentionable here that LIBOR rate was below 1% in January and February, but after March to October, it has been increased, and at present, LIBOR rate is 5.44%. So the importer, those who have imported the item, they have to pay more in comparison to the last year. This is another reason. And thirdly, deferred payment LC matured has been deferred. That already I have mentioned, because our central bank allowed to open the LC for basically, you know that opening the back-to-back LC, there is some barrier. No bank can open the BTBLC for importing the raw materials more than 180 days. But during the pandemic situation, this period has been enhanced by the central bank, and after lifting the COVID situation, this payment has been matured and bank have to pay, and that's why the extra demand has been created by the importer. Another side that I have already mentioned, that commodity item has been increased. You see that the gas was $2 to $2.5, but now it is $10 per barrel. Oil, that was a few months back, it was $45, but now it is 130, 90 or 100. On the other hand, Federal Reserve Bank, the US Central Bank, has increased their interest rate 5 times this year, and that also contributed to depreciate the local currency all over the country, most of the country. This is, you can average the 18%. 18% has been depreciated local currency from different countries. This is another reason. And finally, another reason is that money laundering is one of the issues, because you know that the over invoicing and under invoicing is one of the way to launder money, and so this is another way how the dollar crisis has been increased. So dollar crisis and inflation rate, there is a correlation, positive correlation, because you know that here is a graph. In India, they have devaluated their local currency 7%. On the other hand, their inflation rate was 7.4%. Pakistan, they have devaluated their currency 27.7%, and their inflation rate was 23.20%. In Sri Lanka, they have devaluated their local currency 79.30%, and their inflation rate was 69.80%. But exception is that Bangladesh. In Bangladesh, our currency has been devaluated from that April to October. That was 23%, but our inflation rate is 9.1%, and that's why you can say that Bangladesh is the development miracle. There are some different different obstacles, but in spite of that, our economy is growing. So another effect is that rising of dollar also contribute to pay more BDT to pay dollar denominated FC loan. Due to inflation, consumer stagnated. You know that in Europe area, because we have already mentioned that our 50% export destination is Europe. Their inflation rate was 9.9%, that is almost 10%, and general people are striving for their living standard, but their they are abstaining to purchase new clothes. And as a result, our garments order has been decreased, and some of the major buyers, they have requested our major garments exporter to hold up the shipment. That is the another effect for volatility of the dollar market. Dollar crisis also contribute to import less capital machinery, because you know that Bangladesh at present we have the supply. We have no enough supply of the dollar, and maximum banks they are reluctant to open LC, even it is capital machinery, and as a result, our importing of the capital machinery has been decreased. But it will have a chain effect, because our new capital, new industry cannot run, and as well as the exporter cannot take the opportunity to use their extended capacity to produce their garments item. Another effect is that last 11 months, Bangladesh Bank had sold $11 billion from $48 billion that I have mentioned. In August 2021, our reserve was $48 billion, and after that time, Bangladesh Bank had sold the dollar from their reserve to maintain the supply to the banks to meet up the import obligation. So, what are the initiatives? As a central bank, Bangladesh Bank issued a circular, BRPT circular number 25, that for importing the motor car, electronic item, canned foods, juice foods, furniture, cosmetics, leather goods, if any customer would like to open the LC, they will have to keep 100% margin. On the other hand, all the items, they will have to retain 75% taka before opening the LC, except agricultural item, industrial raw material, and medical item. As a result, our import volume has been decreased, as I have already shown. In September, our import volume was 5.7%, which was 9.95% below in comparison to August. Number one. Number two, our dollar rate has been fixed. You know that before fixing the dollar rate, because BAFEDA and ABB, Bangladesh Bank, they have decided to fix up the dollar, and from September 12, our dollar rate has been fixed, and that is for remittance. It was 108 taka. Now it is 107.5. Yesterday there was also a meeting, and shortly it will be fixed for 107. This is for remittance. Export earners will get 99 taka. Import settlement will be the weighted average, that is 104.5. So as a result, erratic behavior of the dollar has been stable. Otherwise, if Bangladesh Bank could not came forward, I think the dollar rate may be 100, may cross 130 or 40. This is the prediction of the customer. So thanks to Bangladesh Bank for stabilizing the exchange rate. On the other hand, industrial raw material, you know that I have already mentioned that importing of the industrial raw material, we can import as per our GAPT only for 6 months or 180 days. But Bangladesh Bank issued a circular last month, 18 number circular, for importing the industrial raw material. We can import for 360 days. So we have the option to defer the payment for importing the raw materials for 360 days. This is another good initiative. Another good initiative is that, you know that before going to any arrangement of the exchange house for for procuring the Western remittance, we with the bank have to go to for agreement, and before going to agreement, we'll have to seek permission from central bank. But as per AP Circular 20 that was issued in August 10, there is no need for seeking any permission from central bank before going any agreement with the exchange house. So banks are free. After getting the agreement, bank will have to inform to the central bank regarding the agreement with the exchange house. So what we have the challenges, because you know that export earnings fell by 6.2% year on year in September after a short comeback in August in 14% growth, because we have already told that the inflation in our destination countries, USA and EU, they are also striving due to their inflation. And if our export will fall further, definitely it will create pressure to our reserve. Number one. Number two, you know that the exchange house, they are reluctant nowadays after fixing the remittance rate. The exchange house, they are too much. They are little bit reluctant to channelize the Western remittance to the proper channel, and as a result, our remittance has been decreased. That is $1.5 billion. That is the lowest last 7 months. Factory production has been dropped 45% due to gas shortage. This is another alarming situation for our economy. Trade deficit has been grew 6.3%. That is $4.28 billion past 2 months of our current fiscal year. And another challenges is that you know that we have the different mega project, and the debt will have to start to repay the debt from 2024 or 2024 to 2026. So it will be another challenges for our economy. So what we can do to overcome the situation? First of all, we'll have to increase our export earnings, and 1 and 2 is very interlinked, because if you cannot supply the electricity and gas to our industrial unit, definitely our export production will be hampered, and our exporter will not be able to ship the goods in due time, and eventually our export earnings will be decreased. So it will take emergency basis at any cost. At any cost, the authority will have to ensure to supply the gas, electricity, especially for export-oriented industry. This is very much important. And if it is needed, the authority should go for G2G basis contract with the Gulf areas. Other than, because you know that Russia and Ukraine war, we cannot explore, we cannot import the oil from that particular area. Rather, there are some areas, Bahrain, Dubai, or some other Gulf countries. So government can take the initiative within shortest possible time to import the gas and oil from that particular country, and to ensure the supply of the gas to the export-oriented industry. This is very much important. Number 3, you know that our export is totally dependent or concentrated on export-oriented industry, garments industry, but we'll have to diversify our export earnings. We can build up a specialized tourism zone, SEZ, in Cox's Bazar area, with ensuring all types of amenities for foreign tourists. So this will be another way, because this is a long-term plan. We'll have to adopt the long-term plan so that we can earn huge amount of foreign currency from the tourists. Number 5 is that cash incentive, because you know that as we have seen, after fixing the dollar rate, the exchange or remitter, Western remitter, they are reluctant to send their hard-earned money through proper banking channel. So to increase the remittance through banking channel, cash incentive at present it is 2.5 taka. So it can be enhanced for further. interim period, maybe 3 to 4 months. It may be 3 taka, 4 taka, 5 taka, so that huge amount of money can be channelized through proper banking channel. And another is that we will have to stop the over invoicing and under invoicing in the form of trade-based money laundering, because so if we pay more money, more dollar in comparison to real money, that means excess amount is drained from our reserve. On the other hand, in case of under invoicing, lower amount will be channelized through banking channel. So it will have to take proper initiatives from the custom authority and from our authority to curb the over invoicing and under invoicing to channelize the proper FC. So that's it, and I think this will be the scenario. Overall, what I can mention, because you know that our export volume is $52 billion and our import is $84 billion. And out of $84 billion, I have already mentioned that 60% is side basis and 29% or 30% is deferred basis. So we'll have to concern, because we'll have to concern for $50 to $51 billion for input payment. And if our export earnings will be reduced at least 75%, I mean it will be $39 or $33 billion. And if you can channelize the remittance through proper banking channel, I think the trade deficit will not be an alarming situation for the couple of months. So that's it for my presentation. If you have any question, please ask me.
Okay, thank you, Mazhar Bhai, for your very practical aspect and practical perspectives of the forex market and the possible possible situations you have predicted from the all evidence. I believe that all of the participants get the clues to think about all the variables and is interplaying to determine the future impact of the forex market on our debt repayment capability particularly. So at this stage, may I request our another panelist, an eminent economist and academic, Professor Dr. Gaur. So sir, may I request you for sharing your views on these issues, particularly from the research and the theoretical perspective, as well as its implications of the current situations has been created in particularly our sustainability in terms of debt repayment and continue our economic activities in a smoother way.
Thank you. Thank you, Mr. Dr. Mamun, the moderator of this session, the keynote speaker, Mr. Kamrul Bari, who has presented a very nice paper in front of us. And I was also enlightened by the practical deliberation from Enamul Hafiz Latifi, from his practical perspective, and also from Muhammad Mazharul Hasan, who has delivered a very nice analytical aspect of this recent crisis. And it was very, very interesting. And thanks to BDRAL. I was not familiar with BDRAL in the past, but as I know that it is a very renowned rating agency of this country, and you do all the rating independently, and it is unique in our country. We were familiar with Modi and Fitch and other rating system, but you are doing a great job. And I would also like to thank all the people who are attached with this session. In first few minutes, I will give some feedback on Kamrul Bari's presentation, and then I will just try to relate some of the issues from my perspective based on my experience, because I did my PhD especially on foreign exchange market back in 2003. But unfortunately, in Bangladesh, there was not much debate going on exchange rate management, because our exchange rate system was very much stabilized. But because of this recent shock, it has actually come up, and now there are more and more discussions on these issues. So I am pretty much interested on these issues. So especially the Kamrul Bari's point, it was a very, very good in-depth discussion on foreign exchange market of Bangladesh. Actually, our foreign exchange market is basically dollar market, because 85 to 6% of our reserve is denominated in dollar. So it's a dollar biased economy, definitely. So whatever is happening in dollar market, it will have a direct implication for our foreign exchange market. So that's why in his presentation, he has highlighted all these issues, global perspective, determinants. He has rightly identified the two channels, price channel and interest rate channel. This is very good. It is theoretically actually price channel is the long-term PPP type of channel, and interest rate is the short-term volatility speculative channel. In our country context, definitely both the channels are operative, and in addition to this, he was also talking about balance of payments, and I think this is mostly shifter and export import. All these factors are shifters, but main determinants come from the price and interest rate channel. He was also talking about volatility. It is very good, and mostly he has highlighted on the recent COVID shocks and other global shocks like Russia-Ukraine war, which is very good. And these are the two criminals actually, which is actually creating all the troubles for our foreign exchange market, definitely. And he also talked about policy intervention and introduced the issue of cryptocurrencies, and finally he presented a empirical exercise. So I think here the first part of the presentation was very good, but empirical part you have to be very, very focused. Particularly, you have to focus on one particular area, either like interest rate parity channel or PPP channel, because it is not possible to accumulate all the variables in one regression. So there will be a lot of spurious relations, and it will be hard to detect which one is affecting what. So that part needs little bit improvement, but definitely it's a very interesting issues. He has also brought the issue of debt repayment and many others. So I think it overall the presentation was good, and in research part, empirical part, need little bit more focus, and I think he can do it. I was also familiar with Kamrul Bari's other presentation. He is very, very analytically rigorous, but when it comes to the policy, definitely you have to be very, very focused on narrow down one particular aspect. So this is my suggestion. Now I am coming back to the source of the crisis. In Mazharul Hassan's presentation, it was presented very nicely. I like the approach he has made he actually pinpointed all the 7 causes of the crisis. Based on his long experience, he has pinpointed all the causes. So what I think, and from his analysis also, it is very clear that the origin of the most recent shock in the foreign exchange market is not within Bangladesh. It is coming from somewhere else. And then it is transmitted to all the countries, and Bangladesh is also part of it. So who is the main criminal? United States interest rate hike. So that means tightening monetary policy. Okay, this is the main thing to curb or control the cost push inflation, which is the biggest challenge in all the countries of the world, including United States, UK, and other emerging countries. Now, the problem is in most of the countries of the world, excluding Bangladesh, they are actually connected with United States through speculative channels. So that's why whenever there is an interest rate hike in United States, US assets are becoming actually different from other assets. And then there will be a lot of purchase from other places. And this is causing a competitive devaluation in their currencies. So when the dollar rate increases with respect to other top currencies, then definitely Bangladeshi taka and other currencies also follow. So this is the global perspective about the main channel. And now the question is, what is the other? Other is definitely what other demand or supply factors coming from Russia-Ukraine war or COVID-19. Definitely they are prominent, but this is the most important thing. So basically now what we are talking about, are we talking about the short run fluctuation in dollar price or high appreciation of dollar or relatively depreciation of taka in the short run or in the long, or both? From Bangladesh perspective, it is both. So if it is both, then inflation differential is also should be taken into consideration. So if you see the chart presented by Mr. Mazharul Hasan about the relative inflation rate in the country, then you see that clearly there is a differential. And definitely if our inflation is drastically higher than our partners, say US, then definitely according to the relative PPP, our currency will be depreciated. And no one can stop it actually. Now in the long run, very long run, so you can also explain it through productivity shocks. In our country, there are a lot of productivity is going down for certainly long period of time because of energy crisis and other supply kind of problems. In our energy sector, a lot of problems are there. And our productivity is according to Balassa Samuelson hypothesis. If a country's productivity goes down, then that currency will have a depreciation. So if the productivity is going to rise for the partner, definitely there will be a high risk in the sense that that currency will be depreciated compared to the partner countries. And in that channel also, we are getting weaker because we are having serious energy crisis, and that crisis should be managed at any cost if we really want to stabilize our currency. So then some panelists and also from some policymakers in Bangladesh, economic circle and other circles, some of the people are also talking about interest rate policy. Definitely government can try adjusting interest rate policy little bit. But I am not quite sure how much it will help, but it will have a little impact. But regarding productivity side, it needs serious adjustment. But what is the success of the government recent reforms? In government recent reforms, actually to curtail unproductive import. So definitely it will have an impact, and it is actually giving dividend already. And to some extent, government was successful. Our central bank was successful in stabilizing the currency. But how long it will continue? There is a perception in the policy circle that if we fix the rate, then definitely there will be a control. But I completely disagree with this proposition. Why? Because there are two things you cannot fix. Price of anything, and in this particular context, the price of currency, correct? So you cannot actually control. It is the private sector, it is the market which will actually determine or control it based on its demand and supply. The other thing is interest rate. This thing actually artificially you cannot actually raise or lower and fix at a level. So these things are actually creating, these things will eventually create some artificial distortion in the market, and that will be actually self-defeating in the sense that it will automatically become ineffective. Market will automatically adjust to the new rate. For example, say in our authorized dealers rate, they quote some rates, correct? But is it the actual rate at which foreign exchanges are bought and sold every day? No, this is not actual rate. Actual rate, nobody actually discloses. It depends on buyer and seller, correct? But there are some reference rates. You can make a judgment about indicative rate or reference rate, but actual rate depends on actual demand and supply. So the best way of controlling the market would be to control or monitor both the demand side and supply side, not through fixing. So this is my observation. So I think in the presentation part, I liked in Mazharul Hasan also talked about carb market or our parallel market or black market. Actually, this is my PhD thesis. I did my PhD on parallel market foreign exchange rate in developing countries. So it has a lot of things to do with corruption and illegal activities that is going on. Okay, so there is no limit, and people do not actually know how much corrupt activities or outside market activities are going on. But the fact is that the carb market rate is an indication. Okay, like if the carb market rate is 110 taka per dollar, then you can have a clear idea that this is purely market based rate, and this is the actual rate. The actual rate is not what is being quoted in the display board. This is just a show. Okay, actual thing is when you enter into a money changer and ask, say I want to buy $5,000. What will be the rate? Then they start some rate, okay, with some starting rate, and then you start bargaining. Then eventually an equilibrium is. Now my question is, what is the role of government in this bilateral negotiation? Government does not exist, but government's role is very important because government is actually having serious control about illegal hoarding of scarce foreign exchanges like dollars and other hard currencies. Definitely, and government has become somewhat successful, and that's why we can see some stability in the foreign exchange market. But other kind of advice, actually nobody will listen, like do not go to foreign countries for seminar or do not buy foreign product. Who will listen? because it depends on your demand, correct? If you have a strong demand for visiting New York or San Francisco for your business purpose, who can stop? Definitely you will buy dollar, correct? You have to pay your air ticket by charging either your credit card or cash. So if it is cash, then you have to go to car market. So that means that it is market determined. So that's why the role of government will be a stabilizer, no doubt. In the presentation, if you can include some ACU, Asian Clearing Union based payment in the discussion, that would enlighten. I'm talking about Kamrul Bari's part, because most of the bulk payments are actually done through this channel. And in ACU credit and debit part, actually in debit part we are having serious bad position currently in Bangladesh. Bangladesh is actually right after, actually we are having deficit part, and we are having bulk payment in bulk amount. So when you make bulk payment, it will have a direct impact on your reserve. So this is the source why reserve is has gone down drastically from 44 to 39. So you cannot actually stop repayment, because we do not control it. Actually, our repayment decision depends on what is the terms and conditions that you have signed during your borrowing, correct? So borrowing contract will determine your installment and other. So it's not possible to renegotiate those terms until and unless you have a bilateral treaty with one particular country. So these are the few things that I wanted to share. I had many other issues, but I don't want to prolong my discussion because foreign exchange market is a tricky market, and definitely you have to deal with it very cautiously. And I think our central bank and other actors, the most important actor is the commercial bank, because they are actually dealing with those dollars. But one thing that we have to understand, that there are people who are saying that let us find a substitute for dollar and go for other. So these things are not realistic. The realistic view is actually 85%. 85% denomination is in dollar. So it's not possible to change this reality overnight. But definitely dollar will, the position of dollar will go down, and definitely in our basket, we are going to add few more currencies, diversified portfolios. But one thing that we have to understand, that our balance of payments, mostly this is a country with only current account liberalized regime. Our capital and financial account is fully restricted in legal channel. But in illegal channel, it is not fully restricted. But in legal channel, our capital account is, and we are not allowed to participate in any international speculative transactions. For example, we are not allowed to buy any, say, British shares or stocks, correct, from Bangladesh. So this is the reason we have to depend on only narrowly defined channels, remittance, export, import, and few other items. Like in Mr. Mazharul, he was saying that he definitely identified major partners, major commodities. In RMG counts 83%. If one item is counting 83%, then how do we diversify our balance of balance sheet? Is it possible? So basically, this is our built-in thing, and you have to depend on your long-run perspectives. So that's why I would like to say, if we really want to stabilize our foreign exchange market or dollar market, then we have to raise our productivity. This is the only way that Bangladesh can become more and more independent in international market. And over the long run, our currency will be stronger. So we won't face this kind of competitive devaluation that is going on all over the world. And so that means you have to be on your own footing. Correct? You have to buy less, sell more. Sell more, buy less. So this is the key to all success. Thank you very much for inviting me for this session. So it was very much interactive. And if you have more question or comment, you are mostly welcome.
So thank you, sir, for your nice delivery, particularly the point you have highlighted, that is the productivity. In fact, this is the key to drive all the economic sustainability as well. So I believe that all get a good lesson from your speech, particularly the way you connect the productivity with foreign exchange, and also it is also the predeterminant, like determinants of other economic indicators as well. So thank you very much, sir. And at this moment, I would like to request all the participants, if you have any questions, please raise your hand, and you are welcome to ask questions to our panelists. Any question?
Sir, I think due to the network issue, we have lost so many participants.
Okay.
And there isn't
So
a question.
from existing participants, is there any questions?
Hello.
Yeah.
Yeah, Assalamualaikum.
Yeah.
Basically, I don't have a question. Thank you. I just want to take this opportunity to thank Dr. Govind sir because of his views. May I take 1 minute?
Yeah, sure. Please.
Oh, thank you. Sir, thanks a lot for your valuable insights. So definitely, sir, we will talk even more related to this particular issue, because since this issue is the major concern of your society, I have no idea, truly speaking. So actually, I must say that I'm only this topic to, let's say, the experiences we have to deal with this issue. But sir, I'd like to just address one aspect, as you have mentioned, about the time series Fourier regression. To avoid it, actually, sir, I applied at first to identify it. At first, I applied unit root test, augmented unit root test. It told me that it is non-stationary, but for bar model or vector autoregressive model, sir, we need to go for difference. But as far as I can recall, for VECN or vector error correction model, we need to work with the level data. So and the data must be I1 processes, or let's say not I0 processes. That is as far as I can recall, if I'm not wrong. And another issue that you have mentioned about the concentration, I'm absolutely agreeing with you, sir. I cannot agree even more with you. I mean, there are so many possibilities of bidirectional causalities, as you have mentioned, sir. So I think it would be really interesting to dig even deeper into this particular issue. So, sir, we'll be definitely talking, inshallah, to look into these issues and to clarify the aspects of the problem. Thanks a lot, sir. Thanks once again, sir, for your kind words. You have been really kind, and thanks for your encouragement and motivation, sir.
Okay, thank you very much. Like, I think Ashish, do you have any question?
I have one question to Mr. Latiful Bari. As your major source of forex reserves for exporting RMG of expenditure as the basically country's current account, as our export portfolio are very limited in compared to import portfolio. So on this context, is startup and ICT
I think Ashish, I think there is a network problem.
can
Can you
bring
hear
some
me,
limit, I
Ashish?
think. So, question to Mr. Inamul Hafiz Latifi, as is the research fellow of basis. So,
Sorry, I just
am I
missed
audible?
to hear your question properly. Could you please repeat it again for me?
Okay. Actually, I am asking you about the potentials of ICT sector and the startup business, as our export portfolio is very limited rather than the import portfolio, where there have huge potential in the ICT sector to earn more forex income, and also the startup. So I asked you about the which steps should take in, and what are the plan of your sector actually. Could
Okay,
you
thank
understand?
you so much. Yes, Mr. Rashi, for your question. Uh, as we have already learned from the panelist and the keynote presenter of today's webinar, there were sorts of many recommendations we can actually sum up and come up with, like to increase and diversify export, to increase the remittance, and you have touched upon the, and also debt management and other things. And you have particularly touched upon the point of how to diversify the export as a frontier export earning sector, to inspire and to promote and to share the plan of ICT sector, if I have understood correctly. So
Yeah.
we have seen that ICT sector has been doing fantastically very well, earning around $1.4 billion last year amid the COVID-19 crisis, just after the COVID-19 heavy impact, and then also when we were going through the UK-Russia conflict that actually emerged to be a war, a full-fledged war between UK-Russia. So amid this all to a major crisis, we actually were able to earn $1.4 billion, as I said, which was actually almost, and according to EPB, it was more than 100% increase last year. EPB's official data, one was making an inquiry about to share the EPB's data regarding the ICT export. So in the fiscal year 2021-2022, it was $592 million, which actually differs from our private sector calculation. But the interesting point is in 2020-2021 fiscal year, according to EPB, it was the ICT sector export earning was $303.76 million, which means almost a 95% increase within a single year. So that is why I was actually talking about the scalability capacity of ICT sector. The potentiality of that is much more higher than any other sector you name. You name RMG, you name leather sector, you name any sector, compared to the any product or manufacturing exporting center sector. Actually, the ICT sector can offer much more return if it is inspired further with and facilitated further with the fiscal and monetary incentives. So how does it work actually? If we look at the current scenario, the ICT sector currently employs 300,000 individuals directly, who are formally recognized as the human resources. We know that there is also a qualitative differences between the recognition of the individuals. In ICT sector, we term them as the human resource. In some other sectors, they are recognized as the laborer, So from that social status to bridging them into a human resources for earning the very much valuable and much anticipated foreign currencies in terms of dollar, which already our respected Professor Dr. Gaura Govinda Goswami sir has already mentioned that 5% of the reserves in actually reserved in US dollar. So for to encash that and to inspire that and recognizing that ability and the social status given to the individuals for ensuring the decent work ability and goal to achieve the SDG, I mean Sustainable Development Goal, government and Honorable Prime Minister Sheikh Hasina has already declared, for the year of 2022, the ICT sector as the product of the year sector, which is a very prestigious declaration for the ICT sector, by the way. Uh, Considering that from basis, I mean, our association, we have tried to come up with 7 priority areas, which includes making the human resources future ready. We know that we're competent enough, but the skills required by the world market is changing very fast. Our Gaura Govinda Goswami sir has also touched upon that to increase the productivity as a whole of the nation. So basis has already started working with that to increase the productivity of the ICT sector human resource pool, and also to try to understand the potentials of developing the local industry further. We know that there was a fascination, and still there is a fascination to buy the foreign products and services by our clients, the local clients. So to sensitize the local industry and other corporate clients, including also the government public bodies, to procure from the our local ICT farms, we are trying to develop the local industry as well by sensitizing our clients. And also we are trying to develop the foreign markets further to look beyond our traditional markets. So it will help actually to earn a little more from our non-traditional markets, apart from, the predominantly top buyers who are from actually US, the UK, and the European Union region, and also Japan. Uh, Interestingly, we are also trying to increase the ability of our members and as a whole, the entire ICT industry fraternity to access the capital and fiscal incentives that are readily available to grab on. Because of the unavailability of the any proper or adequate IPR, I mean intellectual property rights valuation guideline in Bangladesh, it is very much rigid in a way for the ICT firms to avail any loan just by showing their physical infrastructure actually, because everything that you can value is about their intellectual property. So how to manage that and how to expedite their access to capital and fiscal incentives that are available at the market, that is also a point to increase the overall industrial productivity. So we're working on that. And we have also identified to work with the creating a thriving ecosystem for all the startups. We know that the last year it brought about a very significant amount of more than $600 million as a form of FDI, basically in the MFS solutions, MFS providers, which means that mobile financial service providers. But it has also opened up a window to think about that our startups can actually attract the foreign eyes to inflow the investments in our ecosystem. So that is very much important when we are going through a crisis, to absorb FDIs as well. So we are working on that to attract FDIs in our startups, especially because it is more of a employment creating subdomain of the ICT sector. Sixth priority sector we have identified, formulating policies to help grow intangible assets. There was a discussion a few days ago by several not several, actually a few research firms that Bangladesh, as the Bangladesh government is trying to pursue and implement data protection and also data localization act, it may hamper the overall ICT export growth and some other things. But interestingly, uh, again, the recommendation was a very based on very short run outcomes from some other countries as those were taken as case studies, specifically of Philippines. They tried to show with the case of and with the examples of Philippines that when Philippines introduced such a law, then it hampered their ICT exports. But in the long run, when we see now, it actually helped to increase Philippines ICT export earnings from being in the $5 billion to now at $20 billion. So it actually helps because we know then that in the European region and the West and in some other data sensitive countries, they are prioritizing the data privacy and also data localization. So aligning with that, Bangladesh needs to do that, and we are also a part of advocating that to introduce it here. Maybe in short run, we will be observing some shocks, but which would not be linking forever. So that is one thing. And also we are trying to promote and rebrand the Bangladesh in other countries as a destination for ICT. We know when we used to know and hear the name of Bangladesh in 90s, possibly our ancestors can say that it was a country branded as a flood-prone country. But then after 90s and till 2010 or 2015, it was known as the RMG led developing or development miracle country. And now we want to rebrand it as the ICT front runner of the world. Because very interestingly, we know that India is the largest ICT exporter in the world, exporting around US dollar 26 billion in the world market. But even though considering that export value, Bangladesh also exports in India, and it is a very significant amount. India is the sixth largest importer of ICT services from Bangladesh. So it is very much encouraging for us that we are exporting to the country, which is the topmost exporter in the world. So it actually declares our capacity and skills. So in that way, from the private sector, we are trying to redesign and overhaul the industrial ecosystem and to explore further the world market. But what we need from the government at that segment, we totally need the government to be very much supportive compared to our RMG sector, because it's still when we see that there are many fiscal inspiring policies and encouraging policies supporting the RMG sector, but still absent to support the growth of ICT industry, that actually pinches our heart. Thank you so much.
Thank you. Thank you very much. Now I'd like to request, is there any other
Thank you.
questions? Otherwise, okay. Thank you, Ashish, for your question and the response from Inamul Hafiz. So now, if there is no question, then I would like to get the last final like comments from Mr. Mazharul Hassan. So could you please very briefly, like 1 to 2 minutes, if you would like to add anything?
Okay, thank you, Mr. Mamun Bhai. It was a good opportunity for me to participate such kinds of knowledgeable session. Definitely, it's a sharing, because you know that we have been enlarged different types of issues from different segments, academicians, business, and with the bankers. So foreign exchange volatility, it's I think that it is not end, but it has started. We don't know what will happen after 6 months. We don't know what will happen after 1 year. But I do request BDRAL to arrange such kinds of session so that we can explore our knowledge, and that will be beneficial for us in the coming days. Thanks BDRL, thanks Mamun Bhai, Bari Bhai, and all other participants and panelists. Thanks a lot.
Thank you, Majid Bhai, for your valuable sharings. And yes, BDRL is highly committed as a like global company, that to not only like provide the regulated services, but also create the platform of learning and the sharing so that we can be enrich each other. Because one of the underlying philosophy of the BDRL as a Dun and Bradstreet company, that we are very careful about the and caring about the all stakeholders and industry, bankers, and academics. All are our stakeholders, and we try to care about them, and particularly the business community. We would like to work with them as a partner, and combining all effort, we want to contribute in the growth of the particular company, as well as we want to contribute in the growth of sustainable growth of the business as well as the whole economy. So now would like to listen the concluding remark from Professor Dr. Gould, sir. So sir, if you just like make a concluding remark, then we will wrap up the session. Yeah, sir. Go, sir. Could you hear us?
Sir is probably having some sound problem. Sir is what's that? Probably having some sort of sound problem, as he has already mentioned.
Okay. Gaur sir, could you hear us? Okay, I think, sir, can you hear us?
Can you hear me?
Yeah, now we can hear you. Yes.
If you can hear, then I can say something, but
Yeah,
I cannot
please.
hear you. Oh, okay. Then I cannot hear you. I'm just giving the brief feedback. Mr. Kamrul Bari, I could not understand your question properly. Probably you were talking about unit root test, whether it is appropriate. I think it is right. Main problem is not that. Main problem is in you have to decide whether you are working with long run exchange rate modeling or short run exchange rate modeling. If you are working with long run exchange rate modeling, you have to depend on real exchange rate modeling, which is based on productivity bias theory proposed by Balasa and Samuelson. But if you want to analyze the short run fluctuation behavior, then you can safely depend on modeling aspect developed by, which is based on quantity theory of money, and you can easily use monetary exchange rate determination theory, which is based on money supply differential, GDP differential, and interest rate differential across border. So in this line, if you can focus, then it will be very, very interesting. But definitely your work is very, very good. Regarding other topics that is being discussed by other panelists and some participants, I think I am being enlightened by your points, and definitely it will help in policy making of government. And our government is trying hard to keep a stable foreign exchange market. Central bank is also working, and if all the actors like commercial banks, authorized dealers, buyers, sellers, our money changers and other agents, if all of them work in a very coherent way, then definitely our country will not face any financial crisis. So this is my concluding remarks. Thank you very much for inviting me, and it was an insightful seminar. So thank you very much.
Thank you, sir. Thank you very much for your sharing, valuable sharings, and highlighting the important points which really enlighten all of us. And all the panelists, we are really grateful for your time and your valuable sharings. I believe that your presence has helped us to achieve our ultimate goal, to create a learning platform, the share interacting platform. I believe that we will your today's participation and knowledge sharing will be inspiring for us, and hope we will again get you in our platform in another program. And the effort of the BDRAL to share knowledge and to create a platform for exchanging knowledge will be continuing. So with these few words, I'd like to end of the program. Now I'd like to request Samira to give the word of thanks and conclude the session. Thank you. Thank you very much.
Thank you so much, sir. So our topic, foreign exchange market and its implication in Bangladesh economy, is a very vast topic, and I know this 2 hours isn't enough for this, although we have tried to cover almost all the areas. And I would like to, I'm really grateful to all our panelists, Gaurav sir, Inamul Hafiz sir, and Mazhar sir, for delivering their insightful presentations and adding value to our program. And also, I would like to give thanks to our moderator and our keynote speaker, Mr. Kamrul Bari. And I'm also very grateful to all the participants who has been with us from the beginning. Thank you all very much. Please stay with BDRAL for more insights. Thank you so much. Thank you.